Okay folks, welcome to another review of the index markets from Magnetic Trading. My name is Mark Austin. So what are we going to cover this week? Well, we're going to give you a review of our advisor trades. Remember, these are the trades that we take here at Magnetic Trading. Whenever we take them, we send a message via a phone app with a simple buy, sell instruction. It's then delivered to our clients' phones and they can duplicate the trade if they want to in their own trading account. We're going to give you some training on the S3, R3 pivot point. So this is a real key support resistance area that you can use for your day trading, and it really gives you an understanding on whether the market's going to trend or not. So we use that quite a bit. We'll give you a live example of a trade that we gave to our clients in our live trading room on Friday. We're going to give you some training on the right chart time frame to use for your index trading as well on different markets. And finally, we're going to look at trading opportunities for the week ahead on the FTSE. Okay, so last week, what did we take in terms of trades? Well, we had 3 official trades here at Magnetic Trading. The first was a trade on the FTSE on the Monday. That was a real nice winner. The second trade was on the Wednesday. That trade was into a nice healthy profit. It then slipped back to break even just before America opened. So what we did is we reduced our risk dramatically down to just 0.5%. We do that because the American markets have a real influence on the FTSE price action when the FTSE opens. So if we can, we'll bring our stop to break even, or we'll pay for a stop, or just come out of the trade, because the American markets will reduce our edge. And then on the Friday last week, we also took a trade on the DAX. We had a 100-point target on that particular trade, a real nice buy. It missed our target by 7 points. So we bagged around 93 points on that, and then it fell back down to our entry for a break-even trade. But plenty of time for our clients to bag some nice profit on that particular trade. Okay, so let's give you some training now on the R3, S3 pivot point, which you can use for your day trading. So what we're looking at here is a FTSE chart. It's actually a 1 minute chart here. And actually the first thing I want to cover is time frame. So the FTSE is a slower moving market, a little less volatility in this market than the Dow Jones, which is the American market, Wall Street, and also the DAX. So I actually prefer using a 1 minute chart for day trading this particular market. If I'm looking for longer term trades, then I'll look at the daily and weekly chart, but certainly day trading, if you're in the live room with me, you'll see that we use the 1 minute quite a bit. I find that very, very effective for the FTSE. Again, just because it's a slower moving market. For DAX, you probably need a 5 minute at least. 1 minute's going to be too quick for the DAX. So 5 minute chart is pretty good for the DAX. And again, Wall Street, the minimum chart frame as well is it's going to be a 5 minute chart as well. So S3 pivot points. First of all, let's just show you what the S3 pivot points are. So what we do is we hand out these levels to our clients each day. What we want to be focusing on here is the S3 level and the R3 level. This is what we use for our trade plan. So it gives us things like daily ATRs, 15% ATR, 30% ATR, all vital ingredients for short-term trading on the index markets. Tells us if the gaps are filled. It tells us if we've had 3 or more down days or up days in a row. These are all ingredients for our strategy when short-term trading the FTSE, DAX and the ASX. So the example we're going to be using is the S3 level. So you'll see here S3 level was 6114 and R3 level was on the FTSE was 6326. So the premise here is that action below S3 means that the market's going to trend to the downside. It's going to continue pushing down and unlikely to retrace. If the FTSE gets down to 6114 or just below it and then puts in a reversal pattern, then it can be a really nice buy. Why is it going to be a nice buy? Because if the market gets down here or just below it, and then pushes back above, the market's unlikely to trend to the downside. If it's unlikely to trend to the downside, what's it going to do? It's going to move up, especially if there's a gap to the upside. So the lowest price on the FTSE on Friday was 6202. So big gap down. That's an extreme gap down when we open below the previous day's lows. So the same applies for the R3 as well. So if we're above this level, the market's likely to trend, but if it fails at this level, the market is likely to retrace. So let's go back to the chart example. So we're in the live trading room at this point. The market opens. The market opens at, let's just see, it opened at 61.30. So a 70-point gap down. So big gap down. That means that we're opening 70 points below the previous day's lows. So big market inefficiency there. Some of that gap's likely to fill, but we don't just want to buy. We need a reason to buy. We know the S3 level is at 61.14. So what we do in the live room on Friday, or what we did, sorry, is we watched the price action to see what happened at 61.14. It came down here and it started to consolidate. Now it started to consolidate in what we call a fractal box. So it's a small consolidating price pattern on the 1 minute chart. So you can see it's just pushing down, coming back up, hitting the 61.14 area and then failing. Whilst below it, the market can trend, it can push down lower. So certainly we do not want to buy the market whilst we're seeing this action. But if it breaks above this consolidating resistance area, then it's a good time to buy. So it actually broke the fractal box to the downside. There's no way we're going to sell the market because the overall trend is up. You never want to sell the lowest price of an index market if the long-term trend is up. So on the FTSE, the long-term trend is still up above 5,500. So we still want to be looking for buys if there's big pullbacks. We certainly don't want to be selling the lowest price. If the long-term trend was down to the downside, then maybe we can sell the lowest price, but certainly not when the long-term trend is up. So we're looking at this price action, and what we did in the live room is we issued an instruction, unofficial trade, to our clients to say, look, if it triggers 61.20, you can get long, put your stops below the day's lows, and look for some of that gap to fill. Because again, if the market can't sustain action below 61.14, which is this level here, then it's likely to move up and fill some of that gap. That gap was all the way up at 6,200. So what we see is the market breaks above 61.20, consolidates a bit, stays above the day's highs, and then it's really off. Higher highs and higher lows, and a nice rally develops to the upside. So again, this particular setup works in reverse as well. So if you're above R3 and it fails, then you can again look to sell the market down towards the gap, because if it's not going to get above that R3 level or see sustained action above that, it's not going to be a trend day and it's likely to push back towards the gap. Okay, hopefully you found that training useful and you can use it going forward for various index markets, being FTSE, the DAX, and even your ASX market. Okay, so what to be looking at this week on the FTSE? So 6040, remember that's a real key level this week. Above it, the FTSE is still bullish, but below it, we start seeing some price action below that, and the FTSE will probably see an extended move to the downside. So we'll be looking at that key zone on early next week, and maybe even Sunday night I'll be looking when the Globex market opens. I'll also be looking for a double extreme gap. So an extreme gap is when the market opens below or above the previous day's high or lowest price in the market. So we had an extreme gap on Friday which didn't fill, So on Monday, if we open below 6095, there's a good chance the market will rise up to hit the target at 6095. So we'll certainly be looking for a buy on that particular FTSE market if it sets up for that double extreme gap trade. So that's what we're looking at, guys, and have a great week trading, and we'll join us next week as well.